All right, guys. They say don't work with animals or children, and yet here I am again with my great friend and colleague, Karo Cornips. Karo, welcome back to the podcast.
Thank you, my friend. Good to be here. Am I dressed better for you this time?
A lot better, much nicer. Nice shirt you've got on.
Thank you very much.
I want to remind you that this is not Coachella, and we are in fact in our office here in Melbourne.
Yeah, well, they say dress for you want to be or something like that. So yeah.
Well, it looks nice.
That's why my pajamas in half the time, right?
Absolutely. Now, I would like to say that we're back by popular demand. We really enjoyed your positive feedback on the last episode. So if you enjoy this one as well, feel free to subscribe. Feel free to click the like button and leave us a comment.
Yeah, sweet. Yeah, so market's falling out of bed, which is great. Well, it's good for volatility. What is it? There's a fine line between volatility and fear. We like to educate through the power of song here.
Absolutely.
Quite often we're thinking about releasing a like a Christmas album with such classics as Market Come Back.
You can blame it all on me.
Yeah, it's a personal favorite. What else have we got? We got a few others.
We do have a few others. I don't know. If you would like to hear a whole bunch of market-related cover versions of popular songs, let us know in the comments because we've got a few in the repertoire that we.
Yeah, that was going to be my backup job. If this didn't pan out.
Absolutely.
Yeah.
Absolutely. Lucky this is panning out because we aren't very good at singing. We get told to stuff it.
What are you talking about?
Quite a lot from our colleagues.
All right.
So market's been falling though.
Plenty of volatility come back, which is good. I mean, as trading goes, it's a great thing. Like it's easy to fall asleep at your desk when things are kind of just tracking sideways or grinding up, or even just drifting. Like wood on the ocean.
Absolutely. Like driftwood, you might say.
Well, you might.
You might. One might.
One might.
We were hoping to record this earlier in the week.
Yeah.
And then we could, potentially look a lot more intelligent with a bit of a rebound. But I will like to say to Karo that there'll be plenty of YouTubers still putting out, the market's crashing videos, and so...
Oh, for sure. Look... yeah, like you said, we should have recorded this like at least 2 days ago, right? Because the market's recovered the past couple of days, today in being inclusive. But I don't know if necessarily the volatility is over.
Yeah.
And even in case you're not aware, we sometimes use the word volatility synonymous with falling. But like I sang earlier or serenaded earlier, there is a bit of a fine line. It doesn't directly translate, but I mean, they call the VIX the fear index, which is the American volatility. So essentially, I'm not sure we're out of the woods is basically a quicker way of saying that. No.
And if we do look at a chart of our XJO index, it does look reasonably positive. I mean, we've come down to a potential uptrend line.
Yeah.
We've held above some key moving averages. We've shown some fairly bullish candlesticks.
Yep.
And that would all sort of point towards moving higher from here.
Yeah, we've got short-term indicators, medium and longer-term indicators helping keep our market afloat is probably a way to put it. Not necessarily bullish from here, but certainly there is a tar pit here that seems to have stopped our market from falling. But I don't know if I believe the momentum just yet to the upside.
No.
I feel like it could be almost a bull trap, right? If you think about it like this, it's an opportunity for people to get out at better prices who missed out on the way down.
Yep.
Because people can capitulate down here. They might be like, well, no, I'm not gonna sell my stock down here. That's ridiculous. But if they're still fearful, they might sell it here because it was a hell of a lot of better price than it was down here.
Certainly,
right?
Certainly. And I think the other reality is that our market can sometimes look however it wants to look, but we're a bit of a slave to what happens overseas, particularly in the US.
Yeah, I mean, ultimately, I was pulling my hair out because, for this entire period that we were going sideways or rising, the US market was falling, and I was like, our market's not a little bitch anymore, which is just weird, right? Because our market usually needs permission. We're like the gimp that's tied up with the face mask on, and we need permission to do anything. Usually when it comes to the US, we not only have to watch what they do overnight, but we also need to watch what they do during the futures, just to kind of, am I allowed to take lunch now? Do you know what I mean? But the ultimate strength there, that ultimate resilience, like the bravery. It was like, William Wallace, perhaps maybe even more courageous than that, standing in the face of the US falls. But then we gave up pretty quick.
Yeah, we did. Yeah. And I think it was just due to their additional leg lower. We were happy to do it at the time based on a belief they'd rebound because they're very much a buy the dip market.
Well, they fell 10% from their highs, so they corrected, right? Now, corrections are a lot more reliable when they are preceded by a nice, really strong uptrend, as you know. Whereas looking at the US market, the S&P 500 particularly, that correction wasn't really preceded by a bullish trend. It had a rise, but that wasn't really a trend. And just in comparison, our market, I think, only fell about 5%, 6%. So we still held up relatively well in the short term compared to the US.
Absolutely. And a bit unsurprisingly as well, our market is dominated by, very, very large, low multiple stocks, very, very traditional value-based stocks.
Yeah.
And, a lot of these falls associated with a belief of, rising interest rates, and eventually that's going to lead to lower economic growth. And the companies that outperform during these times, value stocks. The companies that underperform, growth stocks. And US has a lot more large growth stocks on their market.
Yeah, I mean, we're, 55% of our XJO is made up of financials and materials, with financials being about 30% of that 55.
Probably even a little bit more now.
Maybe a little bit more now. And those are dominated by the major four banks, right? So you've got CBA, Westpac, ANZ, and NAB, right? NAB, as we like to joke here, is means to
NAB,
steal.
To grab or steal.
Yeah. They're they're so dominant. I mean, they're not going to be shifted from the marketplace.
No.
They have a license to print money. They're high dividend stocks, right? High yielding stocks sometimes, but not really high growth.
No.
But if you're uncertain about the market, you're uncertain about the future of interest rates, especially if it's a tightening policy, which is what we're seeing at the moment. If you're uncertain about the next couple of years, you very well might want to just park your money into something that offers a good div, right? Or
Absolutely.
that is, doesn't. It takes a lot to shift, and it's the same for some of the miners, right?
Well, yeah, absolutely. And I think another way to look at it is, a lot of these companies trade on very, very low earnings multiples, and those earnings multiples are fairly stable. If you can buy a company that'll pay itself off in the next, 10 years, that's a pretty safe bet. But if you're buying a company who's trading on 100 times earnings, there's so much forward growth, so much forward expectation priced in that if anything disrupts that forward expectation,
such as higher interest rates,
or the expected US recession in 2 to 3 years time,
or like someone finding out that your boss is a lizard person, like in Meta's case. I think that was part of the news. That was why they fell.
Possibly,
was they found out that he was wasn't, or do people not know that? Oh, okay.
We're not trying to get sued here. Like I said last episode.
I thought that was public knowledge. Okay. I guess I'm the crazy one. But
So we've seen a lot of movement, both up and down, mostly down recently across the past week, and a little bit up across the past couple of days. And I did want to say, paraphrasing the great man himself, Warren Buffett.
Oh, I think you're going to say me.
You want to be greedy when others are fearful, and there's a bit of fear coming in, and so we thought we'd take the opportunity to be a bit greedy, and we looked at a few things, crunched some numbers, and we came out with a couple of days ago with a recommendation on BHP. BHP. So if you scroll out a bit, came back to a very key level, and on current year earnings, trading at that level at about 8 times earnings, and then forward earnings about 11, 12 times, and just undeniable value there. And even that forward earnings is based on expectation that iron ore prices will come down.
We did see iron ore come down.
We did see it come down a bit.
It was a couple of big days of falls, but that was it so far. And that was spurred by lockdowns in China.
Yep, absolutely.
Yeah.
But even if iron ore comes down a bit, these iron ore miners are making absurd amounts of cash. It's kind of absurd the amount of cash these businesses are generating.
Yeah.
And not only that, in the next few years, the more future metals will become a lot more important for them.
Yeah.
The copper, the nickel, the aluminium.
Yep.
And also, hopefully, we'll see those big investments in the potash start paying off. You can start to read articles now about the need for sort of fertilizers and things like that to help feed the world. And they've spent billions on it. It's been a bit disappointing so far, but that would be an area I'd be keeping a very close eye on in the coming years. The final thing that sort of really dragged our attention to this in the short term was there's going to be the petroleum spin-off in the next couple of months by June. And if you're a BHP shareholder and you're considering selling the shares, you're probably going to wait until you get that spin-off. It's in the form of a fully franked in-specie dividend. So there's really a big reason not to sell until at least that event happens.
When?
It's going to be in June, hopefully.
In June. This year?
Yes.
Okay. Can they push it back or?
Well, yes, absolutely. The timeline of these sort of things never fixed. There's still approvals and votes and stuff that's going to have to happen, but...
Oh, I see.
Yeah.
And look, I mean, just from a technical perspective, right, just if we're going to read some tea leaves, then you'd have to agree that it's certainly come back to a pretty key level around back a few days ago, back here. 200-day moving average is a great indicator if you don't use it. And it also, flirted with the 150. Now, I don't know, again, I'm not necessarily convinced that this has gone straight back to resistance.
No.
I don't know if you're going to see that explosive growth as it fell, but more, in my opinion, that is probably going to try and hang around these levels because it is going to try and hang around the 50, 100, 200, and just kind of wait and see what our lords across the water allow us to do.
Absolutely. I think, things never rise as quickly as they fall, or rarely do they do that. Someone once said, up on the escalator, down in the elevator.
Yeah, I said that. Yeah.
Well, I mean, I think we've said, down out the window.
I think I was the first one. Yeah, no. I'm pretty sure I said that, yeah.
But, the market is often a bit of a scared beast. Recall the Mobb Deep song, Shook Ones.
Yes.
Market is frequently shook.
It is... there's periods where it feels like the market looks for an excuse to fall, but... there are some rare gem periods where it's looking for an excuse to rise as well.
Yeah. Oh, absolutely.
And I think we just went through one of those, but certainly I think we're the opposite now. Yeah. I think the market's going to be very cautious going forward.
Absolutely.
Doesn't take a genius to say that either.
No, no. And, even though I'm happy that we put this out, you're right. In the short-term movement, probably will be capped a bit to the upside.
Yep.
And, that's fine.
Well, the strategy that we did was okay for that.
Yeah,
right?
we did a stock recommendation, and we also did a bull put strategy.
Oh yeah, so we suggested buying the stock for longer term portfolios, but even from a trading short term perspective, we suggested doing a bull put strategy, which without getting into options because I don't want a headache by the end of this podcast, and neither do you. As long as the share price remains above, I'm pretty sure this support here, you make your maximum profit by the 19th of May. So options are a derivative. They have an expiry day, as in the trade will no longer exist after that expiry day. In this particular context, the expiry day is the 19th of May, which is just under a month away. If the share price is above this level here, our clients make their maximum profit for those who entered the trade.
Absolutely.
And I know it sounds like I'm bragging because I kind of am, because I think it's a cool strategy. And we sound like really smart when we say that type of stuff. But, it just allows us to trade this type of market without going purely directional. Yeah. And again, like we felt confident that the market was kind of stalling. but we didn't necessarily feel confident that the market was just going to explode back up again. And so it's just good to have a few different strategies in your arsenal to be able to trade those types of positions.
Absolutely. And as you said earlier, especially at times like this, you know, when you have volatile movement in each direction, it can be very difficult doing just a bought stock and making money. And I especially say that because a lot of smaller investors will go towards, you know, small cap, micro cap stocks at a time, you know, because they don't have access to more advanced forms of trading, and they get punished during times like this.
Oh, absolutely. I think there's no question that the rich get richer and the poor get poorer, because the people who can take advantage of market falls are wealthy people. Like, I mean, at the end of the day, that's the ultimate truth. The small guy gets punished the hardest, relatively, and the big guy can still come in and buy it up and get stocks at great prices. So that's something we should really talk about, is a bit of a shopping list, right? See if there's any thing out there that, you know, we could recommend as something to keep an eye on, or as a potential buy after the market falls, things that are perhaps better prices. Yeah,
absolutely. I mean, look, I've been favoring the miners, obviously, have been for a while. I think there's some value to be had in some of the medium cap miners, mid cap miners. Interestingly, with the recent selling, we saw Sandfire fall an awful lot. And then yesterday, they had a report and they skyrocketed sort of 6, 7, maybe even 8%.
I'll bring up a chart.
Yeah, bring up a chart. It wasn't necessarily that it was a fantastic report. It was basically just reminding the market that, you know, we still, you know, going to make almost or produce almost 100,000 tons of copper this year at a C1 cash cost of, you know, $1.20 US. And
Can you translate that for us idiots, please?
Yeah, so they should be probably the third or fourth biggest copper producer on our market.
Oh, word.
And, you know, they're making upwards of $3 a pound, probably a little bit more.
What? Okay.
Of copper.
Yeah.
So just unfairly treated by the market.
Yeah. So where's the selling pressure?
So back in at the last report, it wasn't too crash hot. There were some views that they'd overpaid for the Matza, the Spanish copper project acquisition.
Okay.
But I think just unfairly sold down. And really, you know, even if they didn't have the Matheo project and the Black Butt project coming online in the future, I still think they're too cheap. And full disclosure, I used to be a shareholder in Mod Resources, which was part of the Kalahari copper project. That's now the Matheo project. So I'm a big believer in Botswana copper. But even without those, I think it's underpriced.
We should. That's interesting because I know Botswana is kind of a very different African nation compared to other African nations.
Yeah, in terms of stability and
wealth equality and growth
but you know, there's
their GDP is like significantly higher.
It is. But
they're like
these sort of
success
things,
story.
They are. But these sort of things are always fairly.
I guess what my point is, and I know this is going to come across very abrasive. Sandfire can't exploit Botswana as much as, say, other companies can exploit other African nations because do you see what I'm saying?
100% I see what you're saying. But
that's good from an ethical and humane perspective.
I think it's good from a business perspective as well.
You're probably right in the long run.
I'm definitely right. If you can exploit that country, then you're more likely to be exploited there as well. And also,
that's fair enough.
The Australian government has, Australian prosecutors have prosecuted Australian citizens who've acted improperly in business dealings overseas.
So that's more of an American thing where they don't prosecute you because there's obviously like we could just look at China for the past 40 years, right?
Yep.
As an example of that. But anyway, let's not get political because otherwise, you know, I'll get up on my high horse.
You're already on it, mate.
I'm on a pony. I'm not on the horse yet. So looking at Sandfire, you can see it's still tracking sideways though. Mm-hmm. So you might want to see it break that kind of short-term technical resistance there that it's been struggling with for the past couple of months.
I think that's going to be hard without copper pushing back higher. Yeah. Copper's come off a bit, possibly close to 10% from its highs. Yep. And until it pushes back up, I think that's going to be a little hard.
Yeah, no, that's fair enough. You got another one for us?
I do, but I'm not just going to basically, I'm a paid financial advisor. I'm not going to give out all my tips in a free forum. Otherwise, what will clients pay me for?
Oh yeah, that's true. Not much. You're certainly not your looks. All right. Well, the other thing that we could quickly talk about, because we've probably gone on for a while now, and that's probably one of our issues sometimes, is covered calls and cash cover put type strategies. If you've got a portfolio and you've got stock, Australian stock, US stock, and I think other world markets as well, especially if they're Western, covered calls is something that you should definitely look at doing as a strategy. And the reason why I'm bringing that up now is because...
you should have probably brought it up on BHP.
Yeah, so I'll go back to BHP. Yeah.
So this is, like I said, we did recommend this as a stock, and we did have clients do... sold call strategies on this, sold put strategies on this. Yeah.
So you would, one type of strategy is a sold put. And what you're doing is for a set period of time is you're taking on an obligation to purchase shares. And that's a good strategy, we believe, for accumulation, not necessarily for buying stock for the first time. I know that's a weird thing to say, and it's a bit of a weird differentiation, but you're just going to have to trust us. That's probably what it's best used for. If you already owned BHP, right? In other words, you've already exposed to its share price movement, and you see it come off like this, you're probably someone who thinks, and I could be wrong, that I don't really want to sell my stock because I still really like the stock. I still think it's fairly cheap. And the only reason why it's really selling is from jitters from China and jitters from the market. But the long-term perspective of this particular stock is really quite great, especially with dividends and all that type of stuff, yada, yada, yada. So my point is that it's fair to say that even during these falls, you could still have a great long-term view of BHP like we do. So instead of selling your stock, you might say, well, I might just buy some more, right? I could average down. That might be one thing that you could look at. Another type of thing that you could do is sell a put. And you sell a put underneath the support, or you could sell it, where the share price is at the moment, or where it was back there. And you say, basically, I'm happy to buy the stock at that particular price from here to the end of the month, let's say, till, the May 19th. Am I explaining this okay?
I think you're explaining it okay. I do want to interject and say that for a lot of people, I think they're going to have no idea or no clue of what you're really talking about. Okay. So rather than going into detail, just say, using these instruments, options, there are things you can do to basically gain an exposure to the share price, to reduce your risk, or to reduce your exposure to the share price, and everything in between. And at times like this,
it's a great
look. Even more attractive. You can improve your returns. You can reduce your risk, as I said, and we've got a lot of clients doing stuff like that at the present time.
Yeah, I would say that the main function of it is accumulation, yield building, and that's about it.
Or reducing risk as well.
And reducing risk. Yeah. Fair enough. Well, we've got other videos on our YouTube page that talk about this stuff. So go have a look at that, I guess, rather than getting bogged down in the detail.
Absolutely. And if you guys want some more educational content, in the description down below, we're going to put a link to our free stock market course. Yep. So it's pretty entry level, but I really think it's worthwhile if you're looking to get more involved in the stock market. Yeah,
I think if you're a trader specifically, I'll give you a quick analogy is that if you want to get from A to B, you can walk it. And walking is something that you learn in theory as a child. I know some people it takes like 10 years to learn how to walk. We try not to make fun of it.
I walked first time, baby.
Try not to make fun of it. It's just, it came up naturally. What can I say? But yeah, you typically learn to walk as a baby, and you can get from A to B fairly safely, right? You can avoid most hazards. Of course, something can go wrong, but it's fairly safe. You could also drive a car and get to from A to B really, really quickly. But, that comes with a whole bunch of risk, right? You're having a greater reward, and by risk is a function of return. And so if you want a greater return, you need to have a greater risk. Yep. And so by trading in the shorter term, you're automatically stepping into a high risk environment. And it's really important that you understand that. And things that are higher risk require higher levels of education and require higher levels of experience and
Got to
support.
get that driver's license.
Yeah, you got to get a driver's license. You got to have your old man yell at you. Like that's part of learning to drive. Is someone hitting you and physically and emotionally abusing you as you drive around in that Coles parking lot. Wishing that your mum was there instead and that your brother in the back seat wasn't yelling, screaming
Why
for
is
a deal.
Jack here?
I'm just kidding. But you get the point that I'm trying
absolutely.
to make. So if you want some free education, it's down below.
Down in the description. Look, if you're a bit more advanced and you want to hear more about using options to increase your yield or to accumulate stock, we'll also put a link to our covered call sold puts course.
I think it's if you have a portfolio that has blue chips in it, I think you'd be crazy not to look into it.
Absolutely.
I think it's just a great way to be a lot more active in your investment without having to be in a really high risk field, because those types of strategies don't increase your capital risk. And I can say that very comfortably. You can do these strategies without losing money, which is
absolutely
unique, in its own way. So you don't, it sounds too good to be true, but the risk comes at either missing out on profits or paying too much for a stock, essentially.
Yeah, absolutely. And I think, if you do learn more about it, you'll sort of realize what's involved.
Yeah. All right. I think that's a good place to finish, I think.
Yeah, I think so as well. We've plugged our stuff and hopefully we've entertained you. If we have entertained you, let us know. If we haven't, let us know.
Yeah.
Let us know regardless.
Yeah. I mean,
But don't dislike it. Just thumbs up only though.
Yeah, well, how could they dislike it?
Yeah, well, exactly.
All right.
Peace out.